Hi guys, good evening and welcome back. So today we will try to quickly understand some of the principles when we are investing in the stock market. So when we are doing the investment, so it is not about the trading strategies. Okay, so these are all the investment strategies which are for long terms. Okay, say for example 3-year time horizon and 5-year time horizon. So this is all like for long term investment. Okay, so the principles which are these are the Vijay Kedia's principles also. When I was watching one of his interviews, I note down all the points. So I'm same one thing I'm explaining you guys. So as per him, so we need to create a fixed income for life expenses. Okay, so we should not be dependent on the stock market returns basically. So the thing is like in order to lead our life for our life expenses, so we should not be dependent on the stock market, because whenever we see the stock market, it is very volatile and it is very risky. So you cannot see the fixed income from the stock market. So whenever it is up, so we should be happy. Whenever it is down, we should not feel sad also. So that is the reason we should not be dependent on the returns for our life expenses. That is the first point. Second point is be informative and read and study a lot. So actually like stay relevant to the market. So that is what I is telling in this context. So as per this context, so be updated for the market updates or news. So some of the interesting news will be there regarding the market, some of the good news will be there, bad news will be there. Say for example, if you have invested in some of the stocks, so you should be updated with all the information, latest information which are available on the respective stocks. So then only like you can take the informed decisions basically. So otherwise it will be a very big problem if you are not stay updated with the current news. So it is going to be a problem. It is not only about your stocks, in your individual stocks, it also sometimes market updates also required, because in order to take the further decisions, say for example some of the sectors are not performing well, some of the sectors will be performing well. So in that case it will be if you are stay updated or stay relevant with the market, so then it will be helpful for you to take the decisions or switch from sector to sector. So that is what the key in the market is, to stay updated and stay relevant for the market. So that is one very uh, key thing for a key thing in order to stay a longer period in the market. So that is one thing. And the third thing is invest your saving, not the earning. Say for example, if you are earning say for example 30,000 per month, so after removing all your expenses, say for example your savings will be 10,000 or 15,000. Okay, so only those savings you have to invest in the stock market. So that this point is very important, guys. Say for example sometimes what happens is like hypothetically we think like if we invest today this 30,000, tomorrow it will become 40,000. So like that, so those kind of speculations or guessworks will not work in the market. So market is what is going to happen is like we cannot predict the market and we cannot gauge the market how it is going to perform. So that is the reason only in order to be safer side, invest only your savings, not the earnings, guys. So and the fourth point is very important: don't trade and don't borrow money for trading. So basically one of the SEBI report recently published, so that is telling like 90% of the traders lose money, only 10% of the traders makes money. So that is yes, SEBI itself is telling like trading is not for all the peoples. Okay, so only 10%. So the success rate in the what is that trading is only just 10%. So don't do trading and F&O and all. So don't borrow money for trading also and investing also. Okay, so this is very important to stay longer period in the market, so that market will give you the wealth, compounding of wealth. So you can get benefit from the compounding of wealth only if you stay longer period in the market. And that is what the next point as well. Say the fifth point is invest for at least 5 to 10 years and above. So the time horizon we should be very huge actually. Say for example when it comes to long term investing, more than 3 years or more than 5 years only we will be considering it as a long term investment. Okay, so otherwise we will not be consider it as a long term investment. Otherwise it will be considered as a swing trading. Okay, so stay longer period in the market, so that is going to give a very good returns. Okay, so the thing is, the fourth thing is regarding the fundamental analysis. Invest in best management. Say for example, while picking the stocks, say for example, you have to analyze about the management as well. So that management has to be master in the field that they are working in, and they should be like very good in management and corporate governance, and they should be able to deliver the best product to the customer, and many things plays from the management. Okay, so those and all to be studied carefully before investing in any of the stocks. It is not only profit and loss, guys, it is also about the management. So this point is also very very important. Okay, so then comes next point: all your money in the market, but the profit is not yours until you sell, and amount get credited to your bank account. So say for example, if you have invested in the market, so there are four things actually in the market. Okay, realized profit, unrealized profit, realized loss, and unrealized loss. Okay, so only if you the unrealized loss and unrealized profit is not yours, guys. Only realized profit and realized loss is yours. So that is what the meaning of this thing is. Once if it is credited to your account, then only it's your money. Until that is not your money. Anything can happen. So then comes the next point is periodically book your profit. Say for example, if you feel like the stock is overvalued, you please book the profit periodically. Okay, don't wait, don't think like so it will go up. So any stock which is already rallied a lot, so it has to correct from certain point. Okay, so that keep in mind and book the profit periodically. At least whatever you invested, that you take out, remaining might be there, let it be there in the market. Okay, so at least whatever you invested, your principal amount, or your whatever the capital that you invested, no, if you get some decent amount of returns, you book your profit. Okay, so then comes don't be happy and don't be sad also, because in stock market what happens is like when stocks start going up, then we may feel happy, then when start correcting, then we will feel very sad. Okay, so we should not play with our emotions in the market. So let it happen. Okay, take it positively, both the scenarios, take it positively and stay neutral. Okay, and there is nothing to worry about it. Stay neutral. There will be a times if you have really invested in the fundamentally strong and good stock, so then today or tomorrow definitely it will give you the decent returns. So don't worry about anything about it. So you should be very careful while investing also. So those are the points that I want to inform you guys. That's all. If you like my content, please do like, comment, share and subscribe, guys. Thank you so very much, guys.